let me ask you something. Ever wonder if the tax man really knows about that little side hustle or those sales you make online? We all kind of assume that most of our financial life is private. But what if it's not? What if there's a digital detective out there working 24/7, silently connecting every single dot? And that's the big question, isn't it? Because in our totally digital world, the line between your online life, your spending, and your tax return has become, well, incredibly blurry. And it turns out His Majesty's Revenue and Customs is watching far, far more closely than most of us can even imagine. So, how are we going to crack this code? Well, we're going to be digging into some deep insights and expert analysis put together by the team at ProTax Accountant. These guys live and breathe this stuff, so we're getting straight to the heart of what every single UK taxpayer really needs to understand right now. All right, here's a quick look at what we're covering. First, we'll meet HMRC's digital detective. Then we'll peek inside its brain, a system called Connect, and see exactly how your data gets used. After that, we'll look at how the net is closing in on global income, find out what happens when a red flag pops up, and, most importantly, we'll finish up with how you can stay compliant. Right then, let's get straight into it. At the absolute core of the UK's modern tax system is this incredibly powerful surveillance tool. You really have to stop thinking of it as just some government accounting software and start thinking of it as an all-seeing digital detective. And this detective has a name. It's called Connect. It was launched over a decade ago, and it is a massively powerful AI-driven data mining system. Now get this, it wasn't developed by some accounting firm. It was built by BAE Systems. Yeah, the global defense and aerospace company. That fact alone should give you a clue about the sheer power we're talking about here. Its whole purpose is to find hidden patterns and links in our financial lives. So why does it even exist? Well, its one and only mission is to tackle something called the tax gap. The tax gap is basically the huge difference between the amount of tax HMRC should be collecting versus what it actually gets in the bank. We're talking about money lost to everything from simple mistakes to deliberate fraud. And Connect is their #1 weapon for closing that gap. And is it working? Oh, you bet it is. Just look at these numbers. Back when Connect was first rolled out around 2010, the tax gap was a staggering £42 billion a year. Fast forward to the latest figures we have, and it's down to £35.8 billion. That's a difference of more than £6 billion. That's billions in recovered tax revenue going back into public services, and a huge chunk of that is thanks to this technology. But how does it do it? This is where it gets a little bit mind-boggling. The Connect system sifts through over 100 billion data points every single year. Nope, not a typo. 100 billion. To try and put that into perspective, it's like the system is building a detailed financial biography for every taxpayer, piecing it together from thousands of different sources. So, that leads to the obvious question, right? Where on earth is this mountain of information coming from? Okay, let's dive into our next section and look at what's actually being fed into this system. And stay with me here because the range of sources might just surprise you. Okay, just look at this list. This goes so far beyond your tax return. I mean, obviously it's looking at your bank accounts, both in the UK and overseas. It pulls data from the land registry and even sites like Rightmove to see what property you own. It checks the DVLA for your cars. But that's just the basics. It also looks at credit and debit card transactions, data from online marketplaces like eBay and Amazon, your earnings from gig economy apps like Uber and Airbnb, and increasingly, it's all over crypto exchanges. And yes, you see that one right at the bottom? Public social media posts. Let's see how this works in the real world. Let's take a freelance designer in London. On her tax return, she declares a pretty modest income, say £25,000. But the Connect AI gets to work. First, it sees a £500,000 flat purchase from the land registry. Then it scans her public Instagram, which is full of photos from a 2-week luxury holiday to the Maldives. Then it pulls data directly from Airbnb, showing she's been making a tidy, undeclared income renting out her spare room. Now, individually, none of these things is a smoking gun, but put them all together? Bam! The AI flags a lifestyle inconsistency. The spending just doesn't add up to the earnings, and that's what triggers a human to take a closer look. Okay, before we go on, let's pause for a quick pro tip. This is a bit of information that could be immediately useful, especially if you've got a little side hustle going on. You absolutely need to know about the trading allowance. This is a brilliant little rule. It means you can earn up to £1,000, £1,000 in a tax year from a side business, and it's completely tax-free. Better yet, you don't even have to declare it. So if you're selling things on Etsy or doing a bit of casual work, as long as you're under that £1,000 threshold, you're fine.
But, and this is the crucial part, the moment you earn £1,001, you have to register for self-assessment and declare the entire amount, not just the pound over, the whole thing. Now, for a long time, people thought that money stashed overseas was pretty much invisible to HMRC, out of sight, out of mind. Well, those days are well and truly over. Let's move on, because the net is closing in, and it's closing in globally. And this is the reason why. It's called the Common Reporting Standard, or CRS, and it was an absolute game changer. It basically ended banking secrecy as we know it. It's a huge international agreement where over 100 countries, including many of the traditional tax havens, now automatically share financial account information with each other every year. That means the details of a bank account held by a UK resident in, say, Spain or Dubai get sent straight to HMRC. There is simply nowhere left to hide. And if you get caught with undeclared income offshore, the penalties are, they're designed to be painful. Let's be really clear about what up to 200% means. If you owed £50,000 in tax, the penalty alone could be up to £100,000. Then you add the original tax bill and interest on top of that, you're looking at a life-changing amount of money. It's a massive deterrent, and it's meant to be. And that net just keeps getting tighter, especially around the new digital economy. This isn't some far-off future stuff. It's happening right now. Since 2024, new rules have forced platforms like Uber and eBay to automatically report their sellers' income to HMRC. This year, 2025, they're heavily focused on crypto, sending out about 65,000 of what they call nudge letters to investors. And looking ahead to 2026, a new global framework called CARF kicks in, which will force crypto exchanges to report transactions just like banks do. The big takeaway here is that compliance is becoming automatic. So, what actually happens when the Connect system pings and a red flag appears on your file? Let's walk through the inquiry process, from that first quiet prompt to a full investigation. And pay attention, because this is where a small problem can easily become a huge one. It usually doesn't start with a bang. It starts with a nudge letter. The language is always very polite, very soft. You might want to check your return. Things like that. But make no mistake, it's a warning shot. It's HMRC saying we know something. And the single biggest mistake people make is ignoring it. Because if you do, things escalate to a formal inquiry. Then come the legal notices demanding bank statements, receipts, everything. And the final step, of course, is the bill for tax, interest, and those very painful penalties. And this brings us to probably the most important point of this whole discussion. Timing is absolutely everything. There's a night and day difference between what's called an unprompted disclosure and a prompted one. If you find a mistake and you go to HMRC first before they contact you, that's unprompted. They see you as being cooperative and the penalties will be as low as they can possibly be. But if you only fess up after you get that nudge letter, that's prompted. They know you've only come forward because you got caught, and the penalties will be significantly higher. Being proactive can save you a fortune. Okay, I know a lot of that can sound pretty intimidating, but the whole point of this is to be prepared, not scared. Knowledge is power. So in this last section, let's flip it around and focus on the golden rules that will keep you in control and help you navigate all of this with confidence.
Right, here they are. First, and this is the big one, just operate on the assumption that HMRC can see everything. Every income stream, it's the safest mindset to have. Second, keep meticulous records of everything, income, expenses, the lot. Third, do a common sense check. Does your declared income match the lifestyle you're showing the world? Fourth, if you find a mistake, tell HMRC right away. Don't wait. And finally, and this is so important, if you are ever in any doubt at all, get professional advice. It's an investment in your peace of mind.
Now, of course, I have to add a quick and very important disclaimer. All the information we've gone through today is for general guidance. Everyone's tax situation is completely unique, so you really shouldn't use this as the only basis for making any financial decisions.
For that kind of personal, tailored advice, you really need to speak with a professional. The specialists at ProTax Accountant can look at your specific circumstances and make sure everything is in order. You can reach them directly on WhatsApp or by phone at 07985 68912, or you can just send an email to info@protaxaccountant.co.uk. Thanks so much for joining me.